Hello, my name is Lauren. I'll be presenting my financial and strategic analysis of the Hope Medical's case for our managerial finance course. This presentation will examine whether Hope Medical should expand into the online pharmacy market by reviewing key financial assumptions, projected results, and risk simulations. I'll conclude with my recommendation on whether the project should move forward. Hope Medical is a 30-year-old retail pharmacy location in Maduri, Indiana. The owner, Shiva Aramaga, however you say her name, is considering entering the e-pharmacy market following the release of a new government regulations that clarify online medical sales. While the opportunity could expand Hope Medical's reach and competitiveness, it also introduces new risks such as higher compensation, regulatory scrutiny, and digital operating costs. My annual analysis focuses on whether this expansion is financially viable based on a 10-year forecast, capital budgeting techniques, and a risk analyst using sensitive and Monte Carlo simulations. For this financial evaluation, I covered all figures from Indian rupees to US dollars using the exchange rate of 83 rupees per dollar. The total initial investment is about $16,867, which includes app development, registration fees, initial stock, and delivery vehicles. The discount rate, reflecting Hope Medical's weighted average cost of capital plus 5% risk premium, is 19%. We assume a 30% gross margin, 30% tax rate, and a 10% depreciation. Working capital increases 5% annually, and terminal growth after year 10 is set at 10%. These assumptions form the foundation for the 10-year cash flow forecast. Using these assumptions, I projected Hope Medical's revenues, cost, and free cash flows over the next 10-year horizon. The base case forecast shows steady revenue growth and positive operating cash flows. However, when discounting at 19%, the net present value, or NPV, is negative 47,951, and the internal rate of return, or IRR, is only 10.88%, well below the company's required rate of return. This means that although operations might be profitable in the long term, the investment does not currently create financial value. Here on the left, we can see that free cash flow projection. It shows a gradual upward trend reflecting steady growth in sales. On the right, the Monte Carlo simulation histogram illustrates the distribution of NPVs from thousands of scenarios. Most outcomes fall below zero, reinforcing the conclusion that the financial return is likely insufficient under the current assumptions. This heat map shows how NPV changes with variations of gross margins and discount rates. We can see that if Hope Medicals could increase the gross margin to around 35% or lower its cost of capital below 15%, the project could potentially turn positive. This suggests that improving pricing power, reducing cost, or securing cheaper financing could make the expansion financially viable. To account for uncertainties, I ran 3,000 Monte Carlo simulations varying key variables, including sales growth, gross margin, fixed costs, and the discount rate. The results indicate high sensitivity to sales and margin assumptions, even with favorable scenarios. Most simulated NPVs remain negative, showing limited probability of achieving return above the 19% hurdle rate. This reinforces the risk that the project could underperform financially, especially if sales ramp up and is slower than expected. From a strategic perspective, there are both opportunities and changes on the positive side. Hope Medicals could tap into India's rapidly growing e-pharmacy market, improve access to rare medicines, and streamline operations through digital platforms. However, the risks are significant, including fierce competition from established players like Tata, 1mg, NetMeds, and Amazon Pharmacy, as well as increased regulatory oversight and high startup costs. Given these factors, a pilot approach, starting locally in Madura, would allow Hope Medicals to test market demands before committing to a large-scale expansion. In conclusion, my capital budgeting analysis shows that the proposed e-pharmacy expansion currently produces a negative NPV and an IRR well below the required return. While the strategic potential is clear, the financial evidence suggests that Hope Medicals should not proceed with full-scale expansion at this stage. Instead, the company should consider a limited regional pilot focused on strengthening digital marketing capabilities and reevaluate the financials once economics of scale or improved margin can be achieved. Thank you for your time and attention.